Hello everybody, welcome back to Financial Trading Basics Part 13. Stonks go down. Because do they? Yeah, they do. A lot of fun things to talk about for market mechanics and trading economy today. Just because when I've been it's been a couple years since I made the very initial ones. I'm not sure exactly what we've talked about, but we might be a little bit redundant. But like I said, I think short trades are more consistent. But this episode we're going to talk about momentum trading, trying to trade the GameStop or the AMC or just anything that's appreciating very fast and trying to take a long position or a call option position to profit from the appreciation, right? In the previous lectures and on just depending on what the market's doing, I like to wait for the big volatility event. It retraces pretty substantially, and then I'm looking for a company that's genuinely pretty shitty. So on the rebound or dead cat bounce, as they call it, I short at that point, and then just hopefully the momentum dies away. So we'll be talking about how to try to manage money getting into the extremely appreciative positions. Because long positions and call positions, they will always give you literally infinite profit potential. You will never realize infinite profit. But the first thing I wanted to point out, just a little math aside, I'm not going to do math in this video, but stonk, that's syllability, right? You're modifying one letter, it changes the pronunciation incorrectly. I love the meme, love the sentiment, love the intention, hate the word stonk. Great example of syllability done incorrectly. Because you would never say stonk, you would never write, if you reduce that word, you never say tonk or onk in any other word. But going over my trades, ALKM, that one I only had like $300 or $400 on, but I hit a nice, I put 690% return. It was right around 700%, so I rounded down to be professional. NGBL, and then, so ALKM, what I did, since I had such a big return, I took out, I think it was like $1,500 in profit, and I'm holding, $600 of just a free equity. Should you hold free shares, or should you sell out completely of a big winning position? It just really depends on your how you want to allocate your money and other trades in the market. Because remember, it always makes sense to buy low and sell high 100% of the time. It never makes sense to ride the depreciation back down. It's just very impossible to time it correctly. But NGBL, I hit a 500% return, and I wanted to talk about this one because this one is on the gray sheets. The gray sheets is that bad neighborhood of the stock market that your mother doesn't want you to go to. But I hit a pretty good return there. So a gray sheet security is not listed anywhere. You can still put in orders through your broker if you're on one of the major ones, but there won't be a bid or an ask. It's always matched orders. Someone has to say, I will pay this, bid this, and the bid has to be matched to the ask before it even registers. So you don't see a bid or an ask on a gray sheet trade. CMGO, I hit about 100% return. NGBL, don't like the share structure. Again, anything on the gray sheet is pretty ass. So you really have to research those ones. So I sold out of 95% of that position. He said I sold out of probably 70% of ALKM. CMGO, about 100% return. BFT, I sold out. Those are the three penny stocks that I was in. And I took those profits that equated to probably $7,000 or $8,000 of profit. And now, for the medium or longer term, I'm a Bitcoin bull for the rest of the year. So I'm going to be trading Riot, Mara, very aggressively with the profits from these other ones, and more so than looking to re-enter a small micro cap company. And so, because in the beginning episodes, like I said, I was just day trading volatility. Here, there's a lot of positions I like for the medium and long term for the long positions. So any of these smaller cap profits that I have, is I keep it in my account for buying power to day trade, take a bigger position on Riot or Mara on a day that Bitcoin is going appreciating very strong. Let me start my camera over. And so the BFT I sold out, I only had like a grand on that. That was the SPOC. Again, just no real reason. Just I want the buying power for the Bitcoin trade more so. Did want to talk about AMC versus GME now that the aftermath is done, but just like momentum all trades the same. Right? Go look at the chart of AMC versus GME. Go look at the chart patterns of Afria and Tilray or the cannabis stocks of the past 2, 3, 4 days. Right? The chart patterns are all strikingly similar. So trading momentum, the first thing you should do, like everyone says, is don't fall in love with a trade. Right? The days that you see GME going from $40 to $100 to $200 to $400, every time you're going to log on to your stock account, you're going to be like, GME is going to have a special place in your mind. It's going to be this special thing, and it isn't. It's literally just a ticker that's going crazy at that time. And once you watch the market enough, like you'll see that, and I really think just enough exposure, you don't really, I don't say fall for that, but like diamond hands, I think that's fucking stupid. Like, should you, like I said, I don't say stupid, like I said, I don't have great opinions on like the correct way to momentum trade, but the way, like, I wanted to make the difference between AMC and GME, like I said, fundamentally, GME to me is just absolute shit. I didn't take any position during the trading. I would need much more cash flow to take an aggressive position. I took like a $400 position on AMC at $7. I don't know, like probably like 3 or 4 days after the big appreciations. And the reason I took a position on AMC is just because like the $7 to $8 range was the price level before the COVID. Like I said, GME fundamentally is ass shit. AMC wasn't doing well. From a balance sheet, I've only looked at it briefly. But as a consumer and as a name brand, do I think the business model of AMC is going to go out of business? No. Could it? Yes. But as I throw $400 back at it for, again, maybe a reappreciation for another squeeze, but it's at a level lower than it was pre-COVID. So even without a short squeeze, I'm modestly bullish on AMC just as a movie goer, as a fan of cinema. But again, $400 or $500, I didn't take a big position. Certainly didn't take a leveraged position. And what I was saying about diamond hands being stupid is that there's no point to fall in love with a stock. This momentum trade, like the GME was the big one for the first month or 6 months or 8 months of the trailing 12 months. But there's more trades like this, so there's no real point to take a huge position initially, right? Take a small position, make 4, 5, 6K. Okay, now you have your risk tolerance if you want to take a bigger position. So, right, like I'll let Riot and Mara hopefully appreciate if it's in sync with about the timing of the 2017 run. I think there'll be another kind of like modest peak to 75, 100K around May-ish time. So I'll let it slowly appreciate, have 50, 100,000, 150,000 buying power in my account. And then when it has a big depreciation, when Bitcoin comes out and tanks, well, then I will take a large position on Riot or Mara because I'm still bullish on the Bitcoin for the next 6 months after that. So, like I said, it was just a strong correlation. That's what I'm doing in my portfolio for the next 6 to 12 months. I wanted to talk a little bit about the short interest and regulation, because in the last squeeze my GameStops, I said that a short interest more than 100%, turns out you can do that. And I said that was terrible 100% of the time. I still think it's terrible 100% of the time, but I do want to lessen my opinion. I don't know if there's some logic to order flow of just how the brokerages manage that. I don't manage trillions of dollars of assets, so I don't know if that's exactly. I can't speak absolutely for saying short interest more than 100% is egregiously terrible for trading environments. I just don't know. For like I said, for economic structure, like you can't borrow something that doesn't exist, so that's not really real. But is it terrible for trading? I'm not sure. I suspect it's pretty bad. So that's my opinion there. We talked about money management and reallocation, just taking wins from, like I said, I have 3 or 4 micro cap stocks, I have 3 or 4 medium to high cap stocks, and I'm always playing, right, I take profit from one, hold it for buying power for another, as long as I'm still bullish on the positions. Like I took most of my money out of NGBL because I was not bullish on the company. Could come out of the woodworks, update, go back to the pinks or something, maybe. But, you know, I literally bought this at the 0.3 zeros and a 1, which is the lowest price you can get in the open market, and then just immediately put half of my shares on the 2, immediately get my cost basis out of the trade, and then just hold the free shares. It ended up appreciating, and each ticket goes up is another 100% increase. So it's a very, if you get the right one, and like the real trade, like the trading thesis for a gray stock position is literally you think the shit is not going to go out of business imminently. Because if you don't even need a news bump, man. You just need one Joe on there trading the thing, and you know, 100 million shares is 10K. So you need like trading volume of like 30K to triple your money on 10K. So if you can find a company, and I don't recommend, do your own research on a gray sheet. For NGBL, I knew they, again, up until about 2018, 2019, they had a subsidiary, Shia Farms, so I knew they owned some land. I knew they had some, it was a hemp CBD kind of play. So I knew they had some sort of cash flow generating thing, even though it was on the gray sheets and not updating. So you really need a leverage thing to play a gray sheet, I would say. Back to momentum trading. When something really starts appreciating fast, I think the way you have to do it is you literally take, like, I'll take $1,000 and say, okay, I think here's the percentage increase I expect it could still go to, and look at your support and resistance levels and say, okay, if it decreases 50%, well, I'm going to be out $500. Do I care about my $500? Because the momentum, you have to just like be willing to lose a certain amount of money because the volatility is so strong. You just really can't control it, or even trade like without your palms sweaty. But and like I said, I wanted for the momentum ones. You really want to you want to be selling into the momentum pressure. You want to be accumulating. Like the deep fucking value had. Again, I didn't read the DD. But he had it very well timed for why the short squeeze would be about now. So you want to have that 6, 8, 12, 18-month prospectus and really start accumulating, you know, day trade the volatility stocks and then start accumulating the one that you think is going to be very big. And again, have 2, 3, 4, 5 variables in its favor, not just 1 or 2. I wanted to emphasize in this episode there was one sentiment, and that's and you guys said that's what you can see with the different chart patterns literally all being identical, and that's why and talk about why you sell into buying pressure. And it's because you can't time the volatility, and so you always have to do just a back of the napkin calculation of how much appreciation do I think is left versus you know, how big is your position. Because like from GameStop, from at the 485, could it have gone to 1,000? Sure. Could it retrace? Sure. It's almost certainly going to retrace extremely heavy. Again, momentum like that it's not going to last ever. So, right, do you take profit at 100, 200, 400? I think you start taking profit the entire way up. Because once the momentum dies out, I think the sentiment works in the opposite way, where it's like, why would this shit get going again? And then it's even a little bump's not going to, like, I don't I could be wrong, but I don't think GME is going to start trading again. So that's why I think diamond hands are pretty fucking stupid. And that's what I was saying there. Is that it just always makes sense to buy low and sell high, even if your positions decrease 50%. It makes no sense to sit there and type on a forum board, diamond hands, bro, and then decrease another 30%, or however much. But again, you can't time that. Then you just said, well, Brad, what if it did come back and starts riling up? Then I feel fucking stupid. It's like, well, yeah, but that's... You manage your money before this shit happens better, and you don't get into that position. But that's why you sell into buying pressure. It's just because it's brief, it's quick, dies out very fast. And again, if the fundamentals aren't progressing, and fundamental progression is always slow, so even if the fundamentals are progressing, it's still going to overshoot its fair market value or even forward earnings trading at a decent level. Asset correlation, right? And the thing I wanted to point out is there's one sentiment, and so there's asset correlation, but it just changes really fast. Like, Bitcoin and Riot are certainly, and Mara are certainly correlated, right? The cannabis stocks are certainly correlated to regulation. Any sector is certainly correlated to regulation in that sector. But it just changes. Like, two assets could be correlated for a month for sure. And then some news comes out and the company gets sold. Or they've pivoted their business position or business model. And they're genuinely no longer correlated anymore. So I don't think that it's necessarily hard to discern. I just don't think it's, right? I don't think it lasts long. So I think there's a lot of open economic research questions that could be asked there. Jumping to conclusions and news headlines. But you'll see this all the time. Bitcoin appreciated 50. Sorry, my camera cut off there. Missed about a 4-minute chunk. It was a pretty good little bit. It might be redundant. But like jumping to conclusions and asset correlation and news headlines. You'll see it all the time. Bitcoin comes out and they'll say, Elon Musk posted this vague picture of cryptocurrency. That's why Dogecoin or Bitcoin appreciated 5%. Completely like drawing that conclusion, right? Jumping to conclusions. Is there who has the largest septum tear in the financial world? I would really like to know that for personal scientific reasons. How many of you dumb apes? How much cocaine did you dumb apes snort chasing headlines and chasing momentum when none of this is correlated all of that well? So I really want to just pose that to the financial world, because the jumping to conclusions, this was a study on Reddit talking about how people who don't have a lot of humility tend to jump to conclusions, just like our boy Bill Kosiski. And does the financial world tend to have a lot of humility? Oh, fuck no. So I think the septum tear measurement will be very informative for the human species. But for more seriously, that's still pretty serious. But my point is news headlines to asset correlations. You'll see it all the time. They're saying, here's why something happened, and it's for sure why something didn't happen. And in reality, are assets correlated? Yes, but the correlation and the sentiment just changes really quickly. So, two things correlated for a while, and then the company just pivots, or it sells parts of its business, or gets acquired, and now the assets aren't correlated anymore. So I think there's a lot more research opportunity in there. Like me personally, just open questions and economic theory in general. But for momentum trading, again, manage your money well, accumulate on the down sentiment days for something that you have a medium to long-term bullish perspective on, sell into the buying pressure, because the momentum is not going to last. It'll be very transient all of the time. The momentum trades, all the chart patterns look exactly the same. Go look those up yourself. my camera cut me off. It really killed my vibe. But I'll just finish up the lesson here. But that's why stonks absolutely go down. So don't do your diamond hands. Do your research. Don't take a huge position. If you do want to jump into a momentum trade that you haven't accumulated on, literally just take a $500 that you can lose and build a position, and then try to take a larger position if you're in the profit. But again, I would not even take any margined position on the momentum side of the trade. Okay, it just depends on what's going on. Not during a short squeeze. On a genuine price increase, maybe to probably. So thanks for watching part 13.